This is the art of startup war. And my name is Brian McMahon, your host and sensei. Here is what we know. 98% of startups will fail every single day, and mostly due to reasons outside your control. At the Expert Dojo Startup Accelerator, we look to even up the playing field by sitting down with the greatest minds in startup investment right here in our studio in Silicon Beach, where we look to shine a light on your path to success. Now, our guests each week have invested millions of dollars into startups and are the most respected investors in the world. Now, they share all they know with you, the listener. So join us on Tuesday mornings at 10 o'clock Pacific Standard Time, starting off your week winning the war against startup failure. Welcome back, folks. I have a treat for you today. I always promise you incredible investors who are really deep in the startup community, and today is no different to any other day, except we're going to bring a little new slant to you. So, my friend here today is Andreas Penna. Now, I'll give you just a tiny little bio about Andreas, and then I'll let him fill in a few of the gaps, and we're going to talk a little bit about how we met and some of the things that we love together in early stage startups. So, currently managing director and founder of Penna & Company, practices global footprint, specializes in M&A, so he's deep, not only in venture capital advisory, but also startup advisory itself, also international corporate expansion, targeted business development, anything really that involves a small startup or a medium-sized startup moving fast. Formerly a high-tech executive with a vast international mobile experience across value chain. I suck at reading stuff, but here's what impressed. I want to go straight to what really impressed me about Andreas. First time, I had two interactions with Andreas. The first one was with just a really good friend of mine and one of our cohort here, which is Sean at Go Snow. And he said, you got to meet this guy. This guy knows how to spot the next big company like nobody you've ever seen before. And not only does he know how to spot them, when he spots them, he invests and he goes for it. So we met for a couple of beers, right?
That's right.
Over at Sean's birthday, and continued to impress me for the whole evening. So I think you've got so much that you can share with our startup community here, all of which kind of just want to know two things. Mm-hmm. They want to know, what is an investor thinking when they first speak to us, when we're doing our pitch, when we're around them and everything else? And the second thing is, like, what does an investor know about the future of where startups are going so that they can be aligned with that path to a fast-growing company as well? Mm-hmm. So we're just kind of hoping you can unlock all of this in the next 45 minutes. Is that cool?
Sure. I'll try my best.
I love it. One of the things we talked about when we were having that beer was just the success you had in finding some great companies. Mm-hmm. And down in Latin America, which I got to tell you is harder than most. A lot of the time up here, money will drive it, right? And there's so much money in places like San Francisco. But Latin America, it's not quite that simple. Mm-hmm. Do you want to talk just a little bit about that? Bring it into the intro, because I'm sure everybody will be as impressed and fascinated as I was when you were telling me about it.
Yeah, of course. So the company, I've made a few investments in Latin America, specifically Brazil. I'm half Brazilian, so part of my global tour in the past few years, I lived in Europe, lived in Silicon Valley, lived in Asia for a while. I wanted to eventually have a presence in Latin America, and this is maybe, 2012, middle 2012. I decided, hey, end of 2013, I'm going to move to Brazil, and really, try to see what opportunities lie out there. So I quit my corporate job. My last corporate role, I was director of business development and new venture at Samsung in Silicon Valley.
So this was your world, even when you were working there. This was your world anyway, right?
That's right. Yeah. And I had done some investments in previous years as well across the board. So when I was thinking about 2012, 2011, Brazil was really taking off. The economy was really strong. And so I wanted to become more situated down there and see what was available. And so, I began to, ahead of my arrival, I began to have conversations with some friends down there who were local VCs, who obviously see most of the deal flow and can share that deal flow, as well as I set up a bunch of conversations with anyone involved in startups and entrepreneurship, from smaller companies to larger companies. And eventually, a deal passed by my desk, which was called at the time 99 Taxis. And they were one of the competing teams backed by what I think is the most notable VC down there in Brazil. The general partner was a friend of mine, and it was hailed as like an Uber competitor, if you will,
Nice.
in Brazil. Except the focus wasn't private cars, but given Brazil is just such a tough regulatory environment, and unlike different markets around the world, Brazil is pretty unique. So being able to work with government, municipal government, like literally things can block you if you don't follow or adhere to certain things. So I like the spin about, hey, we're going to focus on the taxi industry first. We're going to try to win that over, work with both local and state governments to figure out how eventually they can move into the more private space.
Far lower friction, right? Everybody's going to buy into it. They're all going to want it. Yeah.
Yeah.
Excellent.
And so, at that time, I think it was early 2013, I was part of the first seed round, investment round into 99 with just a few other folks. But when that got presented to me, I looked at the team. It was a very strong team. Specifically, the CEO had a really strong background. He was also the head of Endeavor, which is a really strong emerging markets kind of program to really, it's an ecosystem and support structure and organization to help startups and finance. It's a pretty impressive group.
But you started with the team. The team was the big thing for you, right? It wasn't the idea. Is a good idea.
Yeah. Well, the idea I knew about the idea as well. 2000. I actually was living in Sweden in 2011, and when I was in Stockholm, I had a buddy from Paris who was thinking about a second startup, and he's like, "Hey, I really need to clear my mind and like really focus. Can I just leave Paris, crash at your place for a few weeks? You can help me with my new idea." And that ended up becoming a company called Chauffeur Privé, which was the Uber of France. They were the first entrants in France.
On.
So this past January, I spent it with him in Paris. I was in Paris for a little bit, and he actually sold that company this past January to Daimler. So it was one of the biggest exits in France. So through that,
Did you invest in that company, or were you an advisor?
At that time, well, I helped him develop kind of his thinking and thought process and refined his thinking around what the business model should be.
Wow.
I was at that time I was young enough, or I was too young to realize that maybe I should be a formal advisor. But I was so we spent time, and he
you were just a great friend.
In
LA we need more great friends. Okay.
Yeah. So it was great, and my friend at the time, was a former consultant, so he pretty much already knew how to structure everything at that time, and his vision. He was a really smart guy. But yeah, we definitely bounced ideas back and forth of each other, and it was great. If I had more money then, I probably would have been like, "Hey, can I give you an investment?" But it's when you're in your mid-20s, it's a little bit more difficult to just do angel investments. So,
but you're always starting. Like the consistent here is that the person is
the
vital.
team, yeah. And so through that company, and this is 2011. Then I moved back to the U.S. in 2012 and saw Uber firsthand. So my point is, I already knew what e-hailing was about and this whole industry because one of my friends basically helped developed his idea or his V1, and then I saw firsthand in San Francisco, and I knew some of the early Uber people on as well. And I was just like, yeah, this is a disruptive market. It's going to be big, and there's probably going to be regional players. And so when the 99 deal passed by me or was shared with me, I already knew that this was an interesting market, tested space, really team, right? Because at the end of the day, everything's about operations, and in a market that requires, a lot of capital, so capex intensive, or
you
OpEx
need
intensive.
a great team who can continue to raise and also push forward.
That's right. So,
which is more important, by the way, when you look at it? I mean, I imagine if everything collapses, there's nothing to push forward with. But when are you looking at, is this a great capital raising team, or is this a great team who's able to build product?
Yeah, it's kind of a balance. I almost feel I almost feel that if it requires a lot of capital, and it's kind of like a first mover, winner take all advantage sort of situation, you probably need, of course, you need execution and team
Yeah.
and vision and all of that. But it's almost probably, even a little bit more important to be able to raise capital as quickly as possible. And then if you make some mistakes, you can take the capital that you've raised, build a team that can like produce better product or better vision. Like you can kind of clean up that mess a little bit.
Yeah.
But if you're in an industry that's moving really, really quickly, as we've seen of some local,
Yeah, like Bird,
like
where
Bird,
it's
we were
happening,
talking about
which
it.
is
Yeah,
insane how they've
yeah,
gone to $300 million valuation within, what, a year?
well, yeah. I think they launched end of September, and yeah, I've been keeping my eye on these guys. Know some folks who've joined them. Spoke with some of their management team in the past to figure out what they're doing. It's an impressive company. It's grown really quickly. I believe that next area of opportunity. I think the e-hailing space and what we're talking about. Yeah, team is very important, execution, capital raising, but future areas of growth and transportation aside from this e-hailing space is dockless scooters and bikes like Ofo
Yeah.
from China. I was in London. I rode my first Ofo bike in January as well this year, which is the Chinese version. It's like Mobike and Ofo bike are the two big players out there.
Man, I was there. I was in China 2 weeks ago, and
You
they
saw.
had. It was crazy.
Crazy.
You got like Tennyson, WeChat. They've funded one of them,
Yeah.
and then Alibaba, their huge rival, have funded the others. And all you just see is green and yellow bicycles everywhere.
That's right.
And it's become the ultimate on-demand service.
I
for
totally
everyone.
believe it. I believe in last mile a lot, and whether it's birds like scooters or whether it's bikes, um, uh, these are two. I think there's space for both of these to exist.
Yeah.
I think one, sometimes no matter, we're still human, so you still want to maybe exercise a little bit if you don't have the chance, and whether you can get to A to B with a little exercise in,
Yeah.
it's better than nothing. So
Yeah.
that's why I tend to walk sometimes as opposed to driving someplace or even scootering someplace. So I think these are other big areas of opportunity and growth. And I know that similar to maybe how I thought about 99, this space is going to go into Brazil as well. And so there's another team, similar team that built 99 is now going into this space as well.
And 99, of course, became a huge unicorn success.
Yeah, so 99 was they got acquired January, the first unicorn kind of exit in Brazil in history.
Congratulations,
So-
because it's got a couple of meanings, right? The first one is you support your own. Like
Yeah.
you're making sure that you're giving back to the communities that gave to you. And I think that's a really important message as well for angels everywhere, is like you're all from great communities. Of course, we give back to the communities that we assimilate into, but it's also really good to make sure that everywhere we're from is involved as well.
Yeah.
Secondly, a unicorn is beautiful, and to be able to get in there at seed stage is the ultimate objective. I think I've got 2 lessons from you so far for our entrepreneurs. Lesson number 2 is be a great investor advocate. So be a entrepreneur or a team that are seen as a team that's going to be able to raise subsequent rounds. Because if you're in a fast moving space, just seed investment isn't going to do it. And a lot of the time there's just a focus on seed, and then you just stop and you go into biz dev. And you all know me now. I love biz dev. Biz dev is everything, but having 2 founders where one is focused on investment, never takes their eye off the ball. The other one is focused on biz dev and creating the structure and making sure that your company is going well is a smart way to go. But make sure that you know that investors are looking for people who can go for follow-on investment. You'll find it very hard to get to an exit without it. The first lesson that I took from you was right at the start when you said when you first went down to Brazil, you immediately went and seek to understand before being understood. So rather than just let's put you into a startup pitch place, right? What a lot of startups will do is they'll just go and they'll pitch and they'll pitch and they'll pitch and they'll pitch and they pitch. While there's all this wonderful experience with these VCs. And to take just 2 minutes first and to say, please share with me everything you know about the market and what I should do as a startup to be successful is gold. In some cases, right?
Mm-hmm. Absolutely.
Yeah.
Yeah, I feel that It's almost, but yeah. So it can be. There needs to be, and this is how I approach just things in life. Sometimes I tend to overthink things, or I wait too long because I want to measure, or sometimes I move too quickly without doing as much research as I should. So I think there's a fine line with whenever you do something, at least a new market, a new product, just figure out who are the leaders in that space, investors in that space, and potentially customers that you may have, and just really kind of set up meetings and conversations and learn from those. And then begin to formulate of course you can start with a thesis, but it will
Yeah.
always change.
Yeah.
So,
So what do you like now? I know you've been in San Francisco, you're down here in LA.
yeah.
Obviously LA is the center of the universe. We all know that in startup. But what kind of industries are you looking at for this year and thinking, yes, I like those?
So, you know, the dockless space, and I started reviewing more of this dockless last mile phenomenon. And I'm a big
You mean
biker.
entire convenience, right?
Entire
Where you're just
convenience.
picking it, you're dropping it off and you're picking it up wherever it
Yeah.
lies.
And I started learning about this middle, second half of last year. I started researching a little bit. Somebody at OFO had reached out to me about something, and so I started learning more about this. I'm a big biker myself, and I believe in urban settings. As we have urbanization, there's several trends that are going to occur. Is like there's clearly a gap where you won't take a car, and maybe walking isn't
Yeah,
efficient or timely
for
enough. And
sure.
so, and yeah, you could have a bike. I had a bike here last year, it got stolen,
Yeah,
which really
sucks.
yeah, which does suck, and it's a big time suck
Was
as
it out of
well.
our building?
It was
Those
it
pieces of
was it
shit.
was
I'm
another
telling you, we live. By the way, I say we live together. We ended up finding out afterwards we live in the same place in Santa Monica,
same building.
and there's always a bike getting stolen from there.
There always is, yeah. And so, for me, I was, I'm thinking about it, and when I lived in London, I used to bike a lot as well, but also I had a bike still in there as well. So the point is, clearly this dockless last mile is an important space, and I think with the economies of scale and like usage and the bomb for these either scooters or bikes are going to get so low and so convenient. Yeah, I think it's going to be a big trend and a trend here to stay. I think the idea of ownership of certain utilities to get for mobility, like short mobility. Um, of course, you'll still have people who take it who are serious hobbyists and want expensive bikes
Yeah,
or certain sort of there's certain things that I don't think that will be dockless, like electric skateboards. Um, and there's several reasons for that, but certainly like scooters,
cars, right? I mean,
cars.
my car is in the garage right now. It'll
Yeah.
sit in the garage from 8 o'clock in the morning until 6, 7 o'clock in the evening.
Hmm.
Maybe I'll use it for 45 minutes just to go and pick up my little guy. But then it sits there for the rest of the day. Like, what use is that?
Yeah,
But I
exactly.
don't want to go and rent a car and then have to go all the way to the car dealership and then
Mm-mm.
pick it up and then go and get it. So that convenience you're right, it's going to come
Yeah,
to every single element of our lives.
yeah, exactly. And I think the short, I call it like whether you call it last mile or short form transportation. This is a space I'm going to continue to look at. That's why I was looking at. I've been keeping my eye on Bird and others out there, and I think both dockless for bikes and e-scooters are going to be big. Of course, you have the whole blockchain
Yeah,
like area that's just I
yeah,
think there's just so much going on, whether it's like crypto, like so there's different utilities, and I've been involved since I started learning about this space more or less 2012, um, and got involved a little bit 2013, and I
that was a
have
good time to get involved.
yeah, that it was, yeah. And so, I've had colleagues and friends involved either as investors or who've built companies around this space. Um, I'm on the advisory board of a couple companies that focus on blockchain technology, but focused on clean tech and renewable. I'm sorry, clean energy and renewable energy, solar specifically. So, yeah, a couple months ago, I ended up completing a deal between two of these companies. One of which is HST Solar, the other is Switch. So Switch has their focus on both producers and consumers of energy. So
Yeah.
essentially, it's basically another equivalent like carbon trading platform. And so they are currently under ICO right now. I really like blockchains where technologies where it like makes sense. There's like some utility behind it.
Yeah.
But there's just so much
Crap.
just so much crap out there. Yeah. Like Steam, like whatever you want to call it.
There's
and no one really there's a lot of people who pretend to talk about blockchain and all these things. They use a bunch of buzzwords, but like no one truly gets it.
Yeah.
And at this point, everyone can surmise and think that like, hey, this is going to be the next big currency or the next big utility, or whether it's like, whether it's like ICO X, Y, and Z. Some make sense, but I've been seeing so many copycats of the same great idea. Whether it's like
Totally.
whether it's like a mobile advertising play or even energy play.
Yeah. We're a networking group and we're going to have currency and our currency is our meetings. It's like, no, it's not. I'm like, listen, buddy. Your mom wouldn't have given you $10,000 to fund this company before, but now you want to value it at $100 million and get $20 million based on it being a crypto company.
Yeah.
So the world, but sometimes, look, there's maybe another little lesson here as well, which is that sometimes the world goes mad for a minute. Mm-hmm. And within that madness, there's opportunity.
Oh, for sure.
And some of these companies, which have no business being there and will not be around for a long time in the future, are raising $20, $30, $40 million. And they're doing it relatively easily. So I'm not saying to everybody, go out there and raise money that based on a valuation which your company will never be valued at. But I am saying keep your eye out for opportunity at a time where it aligns with maybe another way, another road that you can take your company down.
Yeah.
Because blockchain, it has done. I mean, the cryptos, we have a conference. I have 3 conferences I'm speaking at next month. And what you realize is all of the experts, it's one of the few spaces I don't feel dumb, actually, because most of the experts have about 4 months experience.
That's right. That's right.
So I'm like, hey, I'm the daddy here. I got 6 months or 7 months. I don't know. Hey, take me to, you've had huge success in LA, huge success in San Francisco. Obviously, you've had the unicorns as well. Can we talk about, we normally like to just look at an investment moment, which is not quite so pretty, mainly so we can look at a lesson that the entrepreneurs can take away. Have you got one for us?
Yeah. So in terms of investors or entrepreneurs?
Either an investment that was made directly into a company, it can be by you or it can be by a friend or somebody that you know, where it just all went to crap and there was possibly something that could have been done about it beforehand.
So I made an investment once in a company that more or less was in the travel and hospitality space, like Expedia or meets like Hotel Tonight meets.
Right. Okay. Good space.
Yeah. Great space. And in the U.S. it seemed to work quite well. Internationally, so this company was an international play, and I think. One of these companies, U.S. companies in the similar space, raised quite a bit of capital. Very strong team, 2 co-founders. Good brand names, both professionally and academically, which can bias you, right? Doesn't mean. I mean, at the end of the day, what really matters, who's successful or which companies win or which people win is themselves, right? So, But without having to do too much research and figure more about the space, I thought first movers makes sense. This works here. Copy and paste somewhere else. Maybe that's the rocket guys, the rocket internet guys. That's their approach. So the rocket internet guys in Germany tend to go into these markets with that approach. But I did have an opportunity to make an investment in a space that worked well here. I made one abroad, and just the whole economics in the industry, like even these guys didn't even know.
It's tough.
They didn't even know. They're like, okay, we don't have time to figure out everything. We're gonna raise, and we'll figure it out because if we make too much research in the space, we may be 4 to 6 months behind, and this is probably a winner take all market. And I was like, okay, sure.
I had a business in that space, in the office rental space. It's a tough space. Yeah. You're taking 10%, 30% maybe commission if you're lucky. The providers don't pay you half the time. If they do pay you, it's hell. And then you got to say, well, we move the entire payment system to ourselves, in which case you're now taking the hits for the booking fees. It's just a tough space.
It's a tough space.
Very few have made it through, yeah.
So I've kind of looked into and that was...
What would you have done differently if you looked at it again today?
I think I was just because it's really easy to be impulsive and when things are exciting to participate. I think the learning lesson is, and here's the deal: if you don't lose some, that means you're not aggressive enough, or you're not taking enough risk. So inherently, like it's the whole risk reward profile. So if you're not taking on enough risk, then you probably won't make that many wins or large enough wins. So I think it's okay to like have some failures, because that means that you'll have some winners as well. Unless you're completely lucky.
Yeah. What's the ratio, by the way, as an investor, when you're going in? What is the expected ratio? Obviously, you don't know a unicorn's going to happen. You're just really happy when it does. But assuming that there's going to be exits of a couple $100 million versus the amount of ones that you put your money into.
Yeah, I think. There's really no. I think the formula is different. I mean, look.
When you're praying in the morning.
Exactly. Like, I think if you're like a full, it depends on whether somebody's a full time. I still have my career. My real focus is corporate development advisory. So I focus on mergers and acquisitions, business development for different clients. And so that's one of my businesses, and investing is another, is kind of a side business at this point. But I try to just pick and choose, and I've learned as well. It really is. The best deals and how you see stuff is not coincidence. It's having to know the right folks who are starting new companies, who invite you in, or doing research and kind of knowing which VCs or other investors that might want to include you. And so the point is like,
how do they find out about you though? Because they have a similar problem. Especially some of these really good ideas, and especially in places like LA, where you've got all these great startups. Like you see them, we have them coming through the dojo all the time, and they're always. It's so difficult to know which investor to speak to, and who to reach out to, and how to reach out to them. And sure, we help them, but let's pretend we don't exist, which is the case for most entrepreneurs. Like, how do they overcome that and find people like you?
Yeah. So it's. It's really funny, even though like we've become so technologically sophisticated, and pure tech in general is like the advancement of all these technologies in general. But at our core, we're still very human. The human brain is like still very much out of sight, out of mind, or requires relationship building to either whether it's raising capital. And whether you have a track record, or whether you have good relationships with investors or other people in your space, or whether you want to invest in companies. Like, I spend a lot of time, one, I'm naturally extroverted, and two, I just like to know what people are up to and what they're building, or what they may be investing in, or what industries may be up and coming, so I can begin to focus my attention to either providing corporate development advisory services in this space, or maybe investment in this space. So I think it's just really about depending on who you are, there's a certain trade-off of getting deep or building relationships with either investors or other people in your community. But I think there's tons of value in that. And though how I get deal flow or how I get presented stuff is just simply through relationships. And people just like, oh, we like this guy and he's worked at this, or we think that he can provide X, Y, and Z value. There's an opportunity. I'm going to make an investment soon in a remote-based on-demand, one-to-one video exercise company, for example.
I thought it was going to be a burger delivery company.
And so, I know the entrepreneur. He's firstly a friend of mine.
Yeah.
I've seen him kind of go through the stages in the past. His first attempt in this space wasn't where he wanted to be, and so this is a second try. But I'm like, hey, he's learned. He's built something. I think it's pretty awesome. And I know the guy, and my gut kind of tells me. So another thing that I've learned is
it an influencer fitness space, or is it a direct one?
Direct.
Okay,
direct.
Cool. It's a good space, especially when you combine it with nutrition.
Yeah.
We have a company, FitPlan app, who did really well, just going through their Series A right now. And similar type thing. And they're doing really good revenue numbers, really good subscribers. People like it, especially for the short fitness bursts every single day that they get.
Yeah, and if you like Peloton, for example, and some of these like on-demand fitness.
Man, services. I never got that. Before I never got it. I think they've really moved into the century. I remember looking at these things in the airport magazines, and I would say, we have a machine which is $4,000 for 15 minutes exercise that will change your life.
Yeah.
But then they evolved and they changed and they pivoted and they came to it. You bring up, I want to just make sure just the 2 points that you brought up there that everybody gets as well. The first thing of what Andreas is saying about is everybody's human is if somebody tries to sell to us, any of us, our natural reaction is to close down. So if you come to me and you say, hey, man, I got this great product and it's going to change the world and it's going to be revolutionary, it's like, okay, cool. Awesome. I'll listen to you. I'll let you do it because I'm pretty polite. And then I'm going to walk away. But if you interest me, like if you appeal to my geekiness or you appeal to something that's relevant for me. So if I'm one of 4 investors in a room, at least I've done a bit of research about me. Like find out the stuff that interests me. And then you either come with something which is relevant to my space or you say, to Andreas's point, hey, Brian, Andreas, whoever the investor is, I would love a couple of minutes of your time just to tell me what you think of this product. I think it's really cool and it's going to change the world, but I'd love your perspective, right?
Mm-hmm. That's right.
Yeah. So first point, make sure you do that. Second point is hustle. Investor after investor say on this show, it's very seldom that the deals that come directly from the entrepreneurs are the ones, not that they don't do them, but normally it's relationships. Normally it's another angel, it's another investor, it's somebody in the business who'll say, have you heard of this company? Mm-hmm. So hustle. Our best entrepreneurs are seeing dozens, if not hundreds of angels just to make sure that the word is out.
That's right. And I think it's also important to, I've also been worried about like people who name drop too much for companies that are raising, who tend to say, oh, this person X, Y, and Z are interested, or they may have, let's say, a couple notable investors, and they really kind of harp on that point.
Yeah.
I've learned that those who are too much into, who could be interested from a name's perspective. I've had an experience that like now I know that okay, you should be relying more on your product and team. And
so lead with the product and the team,
yeah.
And then at the end you can say by the way, we have these investors involved, yeah. But get them to love you, yeah. Hook you in with the yeah. product first.
Or have those folks who are notable be the ones who reach out to that person, yeah. If there's a specific person to target. But yeah, I feel sometimes those folks who tend to focus on financing and just who's currently interested, there's a correlation with at least for me, I'm biased now that there's a negative correlation.
Yeah. I totally agree. Yeah. What skills do you feel a startup has to have in your mind to have an opportunity of success? If you're gonna line them up, what does it look like?
I think experienced team. So somebody, part of that team, and you could be a new time founder, but everything is you minimize risk no matter what you do in life. Whether it's skiing down a hill one time versus the 100th time, you'll probably be more successful the 100th time than the first time. So, I think just having experienced guys around you, whether you are experienced or having a team that could be experienced. Who's seen it before, that's always very helpful. Another skill is of course operations and product, like somebody who's going to be there from maybe a co-founder or a product lead who's really strong, kind of like every day, very focused on product and development, and slow, that kind of fast but slow pace, focused on that, and not an area where I wouldn't be good at. I'm just more kind of less aggressive and like
suck at that area.
Yeah, and for what I'm good at is corporate development, and so I also think another area important is corporate development, because you can have a really strong team or a really strong product, but if you don't have somebody and some of my clients I've worked with, they've literally tried to, get into some of the top technology companies to do BD deals or licensing deals, whether it's several of the top 50 technology companies, and they have some of my clients have 10, 20, 30, $50 million of VC financing, some even more.
Yeah.
And they may have a VP of BD or a team that can focus on that, but they'll often bring me in, and I'll end up getting them through the door and brokering a big commercial deal for them. That they're these guys are like, damn, we've been trying for 2 years. Within 1 month, you got us to where we need to be.
Yeah.
And so the point that I'm trying to make is that you need to have somebody who's strong at corporate development, who has the relationships and knows how to go about brokering deals and getting commercial agreements done the right way.
You're
So
a biz dev person.
biz dev, it's
You
really.
have. I'm a big. I'm a big believer. Like there's two or three types of people, right? There's the type, and you can always tell. Whenever I'm talking to startups, and I'll say, well, are you more of an operational? Are you more biz dev? And they'll say, well, I can do both. Or I'll say, are you creative? Are you biz dev? Or, oh, I can do all three. I'll say, okay. When you wake up in the morning, are you trying to, or when you arrive in your office space, are you trying to remember if you've turned the lights off or if you've locked the door or you've unlocked the door, or are you trying to think about which clients you're going to close today? Because that's it, right? If you're just thinking, I was sitting in the office this morning, I get in pretty early, I was sitting in here, and I saw Sean walking around the front, and I thought, oh shit, I haven't opened the front door yet. Because all I'm thinking about is, okay, we've got this startup, this is the investment we need, okay, have we reached out to this person, okay, we're going this level here, like it's all, everything from me is biz dev, biz dev, biz dev.
Yeah.
But you have to be balanced. To your point, if people like us are not balanced by great operational people, great COOs, then no matter what we do in the company, it's very, very hard for us to make the success out of it that we want to. And it's exactly the same for the COOs. They just have the opposite curse.
That's right. That's right.
Yeah, it's
So
great
I
advice.
think those are. And then one last area is policy, depending on which market you're in. So if you are in a new area, like, that's affecting whether you're, let's say, in this new crypto space, or whether you're a company like Bird, but basically being disruptive in an industry that's highly regulated, you'll need to have a strong regulatory policy person on your team who's probably seen this stuff before and knows how to navigate. Right? Regulators or like local officials.
Like Bird were really smart actually afterwards. They hired Carl Hansen from Santa Monica Chamber, who was their government person for years. So they immediately brought him in to make sure that they dealt with it. So they realized it afterwards, but that's okay.
Yeah.
They realized it in time.
Yeah.
So normally we have a couple of quick fire questions here. I would ask you your biggest success ever, but what's the bloody point? You've had unicorns. I mean, you just can't top it. Can you top that?
I mean,
other than more unicorns.
Yeah, I think there's every year there's a minor success here or there, or a big one. So
is there? So actually, maybe hang on a sec. I'm assuming. Is there one success that just stood out from a, oh my God, that's the most incredible business moment of my life perspective that wasn't the unicorn?
Yeah, I think so. I think so when I left the corporate world, I worked years at, like, my first job was at Microsoft and headquarters. So I worked in like product management and strategy with mobile, and then I was at Vodafone Group doing M&A and corporate strategy in London. Then I was another corporate role in Sweden, and my last one at Samsung. So when I went to leave, the reason why I left and I decided to start my own practice was like, hey, I've got all this corporate experience. Like, I find it much more fun to work on different projects. I keep on getting asked by different executives or different companies to be introduced to X, Y, and Z, or help person X with Y. I'm like, why don't I just try to do this? So, after quitting my job formally, I ended up selling. So my first client that came to me was in the video transcoding space.
Yeah.
And I wanted to bring these guys into Samsung because I really liked their technology, but I had left, and they said, hey, you left, you were kind of our internal sponsor. We don't know whether we should raise, whether we should stay the course, or whether we should sell. Can you perhaps do a project to evaluate that? I was like, oh, like a consultant, like a management consulting kind of analysis? And they're like, sure. And I was like, okay, well, I've not done this work before, but I've never had a client. I guess you'll be my first, so let's try it. So, they were my first client after I left. Within like 6 weeks after I left my corporate role, and then 4 months after that, fast forward a bunch of things, I ended up selling them to Yahoo. So I was their like M&A advisor. I learned.
That's got to feel great, because
that was amazing.
You suddenly get there and you go, you know what? I really do know what I'm doing.
Yeah. Yeah. They're like, can you? I was like, well, I've done buy side M&A like analysis and projects and X, Y, and Z. I was like, well, sure, I've never done sell side, but like, I think I can do that. Sure.
Yeah.
And that was a fun process. And I spoke with all the large technology companies in Silicon Valley and elsewhere. And it was just such a learning experience of what it's like to really get like, your hands dirty and really learn what it's like to get a process and move things along than the corporate ivory towers that many people are used to. So that single project taught me how to truly close by yourself.
Yeah.
as opposed to because of an
As
organization.
opposed to just being good in an organization.
And that was really powerful. And so that's what kind of started my career into doing what I'm doing now.
I love that. Best advice you ever received?
Best advice I've ever received. Wow. I would say the best advice I've ever received. Uh, actually, it's funny. That's a funny question because I've had this advice for like 10 years, and I probably only started listening to it the past 2 years. It's gut. Because I've always been like a very
Follow you guys.
science-based, like, things can be measured and calculated. It's based on like either like how you analyze something or how smart you are. And then I realized like actually there's something there called your gut, which makes us human, and you can't always put your finger on it. And I've sometimes overpowered my gut, actually many times, whether it's business or personal, and I've been wrong.
Your gut's
And then I learned,
99% of the time.
yeah,
That's right. It's funny.
and I've
Especially about people.
about people, and I've realized that I'm like, okay, after it turned out often, like 9 out of 10 times it turns out the way that, like, when I didn't respect my gut, and then I'm like, see, that was that voice that you should have listened to. And so now, and I've had that advice from some of the some of the people in business I respect the most. And yeah, as of the past few years, I've realized, okay, that there's a reason why they've been saying it. Now I understand.
Yeah.
So, not everything can be measured and precisely calculated. Even though we're humans and we live in this like magical, technology fueled world where everything calculated, we're still human. So respect
like
your gut.
Okay, I like that. Respect your gut. Book that you'd recommend. By the way, that's for entrepreneurs dealing with investors. It's the same. It's a really great piece of advice. If you feel that this is a marriage, if you feel that you're going into a relationship and it just doesn't feel right at the start, you're pretty much right 100% of the time. Follow that feeling for sure. Right. Favorite book?
It would be Principles by Ray Dalio.
I don't know this book.
So Ray Dalio is the founder of Bridgewater Capital. He's the kind of like, people hail him as the Steve Jobs of finance. I think under management, maybe around $150 billion. He's one of the most successful hedge fund folks in the world. And he wrote a book called Principles on his philosophy as to how he thinks about decision making, life, just a bunch of stuff. And it's a great book. It's really a great book.
I love it. What will somebody learn from it? The biggest thing they'll take away?
The biggest takeaway, there's a lot of how he thinks about analysis and measurement, but I guess feedback. He's really big into, he thinks that throughout every encounter, whether it's a positive or negative one, there's always something that you should know that you've done well, and something that maybe you could have done better.
Yeah. Brilliant.
So it's just like he's a master of constant self-improvement and analysis. So that's pretty interesting, and I think that's a big takeaway.
I love that. Who's your favorite entrepreneur, by the way? The last 5 years.
The last 5 years. Who would I say? Favorite entrepreneur. And that's funny because then there's celebrity entrepreneurs of like you could be drunk on the idea of one versus somebody you may know personally.
You got a secret Kim Kardashian crush.
Exactly. And versus like that person personally, and like maybe other people don't know that person, but I've had friends who've started meaningful companies and who've done well that I personally, because I know them and I know that like wow, they really were they really overcame the odds. But from a celebrity, maybe most folks won't know some of these guys because maybe less famous there. But if you're gonna choose like a more or less kind of well-known guy, like I guess Elon Musk, like everyone else, because just like
because he's pretty epic.
Yeah, he's pretty awesome. Guy started a space company, Tesla. Like
Dude,
he's just like crazy.
Okay, leaving aside Elon Musk.
Yeah. Yeah. So
when I was in the UK, I'd be like, leaving aside Richard Branson. Okay, just someone who just epitomizes what it's like to be an entrepreneur. They don't have to have exited. They don't have to have had a huge company, but they epitomize everything that you would really admire in an entrepreneur.
Yeah. So I have quite a few friends who have personally who've started companies in the past five years who've done quite well. Whether it's like Oscar Health Insurance, a friend of mine there, to my buddy like Chauffeur Privé who did a Uber France, to friends in Brazil who started different companies, tech companies down there who've built small empires. I don't know. I guess I respect everyone. It's hard to say favorite because every person is unique, and they've all overcome their own challenges.
You're like a guy with 6 kids. You don't know if said any of them, but there's always. But I like it. I'll take Elon as the one, and I agree with you on the rest of them. And just as a finishing point, what's your advice to all of the very early stage entrepreneurs out there? They're either thinking of starting a business or they have started a business and they're in pre-seed or seed and they're going forward. I mean, you've seen this whole journey through so many other entrepreneurs. What would your guidance to them be?
It's funny. So if I were going to take my own advice and, I may be, for example, I'm thinking about something, going back into operations or maybe doing my own thing again, product-wise. I started thinking through that process of myself. And so I think the biggest advice, and this is what I've thought about, is like, a lot of people I think some folks tend to just think about growth and users. I like to think about what is the commercial viability of this. So there are some companies who make money down the road. They don't really think about how to generate cash. But for me, it's like, if you don't have a business model, like if you can't commercialize something within the first year or when you launch product,
it's all market validation.
Yeah,
right?
It's like unit economics. Yeah. Like if you're just gonna build some app that can like turn people into monsters.
Yeah.
And that and you can put like stickers on them or like whatever, something random, like, oh, this is gonna be great. Maybe you have like millions of users and you end up getting acquired by Facebook or something like that, like one of these mask companies, Masquerade, I believe it was. Some of these ideas, like more like the super majority of these, you don't make it. You don't make it, and it's unclear whether they will. So for me, it's like, hey, and it depends on what life stage you're at in your life. But if you're somebody who is a bit older, or who has family, or thinking about that, or it's like, or you're kind of like, hey, you're done testing, you really kind of want to build something sustainable for those reasons. Then what's the unit economics? How are you going to make money day 1 when you launch, or day 2, or like day 90?
Yeah.
But if you're just going to build something where there's no end in sight, and I think and 10 years ago, if you had you could always get financing and find a home if you had users, but now everyone is like, there's just the market is so saturated, it's really hard to get users on a platform.
Yeah.
Right. And so
you have to have that long-term plan that you're following religiously, right?
Yeah, I think I always just tell my friends and people, and for any company that I would even invest in, like, how are you going to make money day 1? Yeah. So
I love that.
Yeah.
And I want to finish right there. Where's the money, Jerry? How are you going to make money on day 1? I love it. Andreas, thank you so much. For anybody looking to contact you, would you like them to contact through us, or did you want to give out any way for people to contact you directly? What would you prefer? Sure,
they can contact me, okay. or you. It doesn't. But my email is Andreas, Andreas @Pennaco, PENNACO.co. So Andreas@Pennaco.co.
Cool. Thanks, buddy. Listen, you're a great friend to the startup community all over the world, especially here in LA. We're delighted to have you here. We want to keep you here. We want to keep you investing in startups. And just a big thank you from me and from everyone else for being a huge part of our community.
Thank you. Thank you.
Thanks for joining us. If you know any other entrepreneur equally ambitious as you, then share this podcast by paying it forward to other entrepreneurs who are building your own army. Now, as always, our website, expertdojo.com, is packed with information to help you grow your business, find investment, and train for victory. We also walk our talk and invest in startups every year in our accelerator here in Silicon Beach. You can always reach out to me at brian@expertdojo.com, and I look forward to being back here again at our regular time next Tuesday, 10 a.m. with another of the world's top investors, helping you win the war against startup failure.